Today, so for today's class, Mr.
Mr. Motif, we can't hear you. You're talking. We can't hear you. Okay, I need to. I don't know what the police will do now.
All right, thank you so much. I was muted, so I couldn't continue talking. Now let's proceed with our activities. So today we'll be having a lot of conversation in the class, and also I'll do there's what we call skimming in reading. I'm going to skim through the material, then we'll do more of it on our trading accounts. More of it on my own trading accounts here, so you can all see what I've been explaining to everyone. So let's go into the day. Now, before I continue sharing my screen, before I continue sharing my screen, please, I would like everyone to listen up very well. I would like everyone to listen very well, because today we'll be talking more of where we start from, which is the lot size. Are we together?
Okay, yeah, with you.
We'll be talking much of leverage, lot size, risk management, and some common mistakes. The rest are just minor things. Do you get it? Some common mistake traders do. And what is trading plan? How can you set your own trading plan? And I'll use my own as an example, which everybody is going to see. Are we together? So all these things are what you are going to do for today class. So while doing that, please ensure that you jot everything, every single thing I'm going to say today, please, is very, very important. Very, very important, like I said earlier. So I'll be sharing my screen back now. Or more. Today code is just too much. Yeah, so let's start. As you all know, we started with what is PIP. Is that not so? So while going through the PIPs, we are able to understand what a single PIP simply means. We are able to understand what is bid and ask price. And with the help of bid and ask price, we're able to determine what is spread and some other forms of trading. Just that we didn't finish the forms of trading. We only selected only one where we talk about market execution. Don't worry. Today we'll be talking about the rest. And later on, part of it was when we talk about stop loss and take profits. And I hope everybody understand the concept of stop loss and take profits. And if you still don't understand, don't worry. I'm going to do a live session of it today. Live session, like you all see how stop loss and take profits coexist. How did they work? Sorry, I just have to stop all this notification. All right, now no more disturbance again. Let's continue. So like I said, today we'll start with leverage, which is the number 6. Now let's start. What's leverage? Leverage is the ability to use something small to control something big. Do you get that concept? Using something small to control something what? Big. In this case of Forex, using a small capital base to control a larger lot size. And I want you guys to understand that this concept of leverage, it takes a brief history of how Forex was initially meant to be. When we're talking about Forex, I told you one thing about Forex, that before we can't trade the Forex market. It is only the big banks, the big boys. Do you get it? Those who have multi-millionaires that can only trade the markets before. But with the help of brokers, we are now able to trade the market with our own small money to make something big in the market. Now, do you understand the concept of where I'm heading to now? Now, like I said earlier, initially, not everyone is allowed to trade the forex market, just as we have the currents, just as we see the currents in the New York Stock Market Exchange. In New York Stock Market Exchange, you can't trade. Nobody can just enter the market. You must have there are companies trade in such kind of markets. Do you get it? But as you can now see now, the in forex are only traded by people that we call cabals. And who are these cabals? These are the men of Wall Street, men with bigger funds. Are you getting it? Men with what? Bigger funds. Usually what? They are usually investment bank, rich men, monarchies, big businessmen, company owner, etc. Can you see it now? So also, it was in Forex then. That's how it is too in Forex. It's only the rich men, bank, companies, they are the one that can they have direct access to trade the forex market. But now, with the help of brokers, we are now able to trade what? To trade in the forex market. Now, during this investment of the internet, the world became what? A global village. And in that, you can buy and sell from anywhere around the world you are. So instead of an individual trading a $1 million account, you can see what I'm saying. They use millions of dollars to trade then. But now you can use as low as $5 to $10. Some broker will tell you that their minimum is 10. Some will even tell you 5. Do you get it? So you can actually place a trade with as little as $10 because you didn't go alone. You go through your what? Through your broker. So, and these broker are well recognized in the World Bank. Do you get? And the World Bank give this broker access to trade bigger fund. Do you get my point now? Because they have large capital base. Now, please, I hope you guys understand the little illustration I'm explaining about leverage. Now, I'm going to talk about the next topic now. Leverage is just something simple. It's not something hard. Just for you to understand that, okay, with the help of we using small accounts, leverage of 100, leverage of 200, leverage of 2, leverage of 1,000. And there's even a broker, SNES, which is doing leverage of unlimited. That means it has no limits. So, because they have big funds in the market. Now let's look at lot size. With the help of this lot size, you'll be able to understand what leverage is also talking about. Now, lot size is the amount or quantity of a trade that you can bought or sold. It is sometimes called your position size or trade size. In the forex market, these currency are not bought and sold singly. You can't just buy and sell singly. Do you get it? They are bought and sold in packs called what? Lot size. That is what makes the gain appreciable. If not, your profit in forex will have been 0.00001 or something like lesser than that. Do you get it? But because you can buy this currency in bulk or pack, known as what? Lot size. Lot size calculation, I'm going to teach you how to know the kind of lot size to use on your accounts regardless of any amount you're having. Once you apply this formula, it's going to give you the exact lot size to use. So I will now teach you as time goes on how you can leverage on your lot size. What are the things you need to do on your lot size? Okay, I'm having so amount of capital. What's my lot size? From there, you'll be able to calculate what your risk to reward ratio, risk management. I'm going to teach you all these things tonight by God's willing. So like I said earlier, that's the basic concept of what? Of lot size. Now, there are three types of lot size. There are three types, or let me just say there are type of lot size, but basically there are three. And what are they? One, we have the standard lot. Two, we have the mini lot. And three, we have what? The micro lot. Please note them down. They are very, very important. You need to understand the concepts. And I'm going to break it down for everyone to understand. Now, when we say something is standard lot size simply means that it contains what? 100,000 units and it represents by what? One lot size. I will show you, it seems I showed you guys where lot size is. Under where we have market execution, this and that. That's where we have lot size. You get it? So I'm going to explain what the standard lot size contains, what the micro lot size contain and what the mini lot size entails. Now, please note, a standard lot contains how many? 100,000 units. Then a mini lot contain what? It contains 10,000 units. And what's the representation for standard? For standard of 100,000 units represents what? One. That means one lot size is equivalent to 100,000 units. Are we together? Then for mini lot size, it simply means that 10,000 units is equivalent to what? 0.1. Just by dividing, be removing 110 from the standard lot, which is 100,000 units. So if you remove 10, then we'll be having what? 0.1. If you remove another 0 again, then we'll be having what? 0.01, which is what? Micro lot size, which contains what? 1,000 units. Now, let me break it down. You may look at it like, I don't still understand. What's the concept of this? Now, let's break it down with some simple illustrations. And I believe with these illustrations, you should be able to understand what a standard lot size means, what a mini lot size means, and what a micro lot size simply illustrates about what it simply means. Now, let's see how we can end through this lot size. Let's break it down with simple illustration. Let's assume we have three traders, trader A, B, and C. These in what? They deal with footwears, shoes, for example. You know, for them to make profits, they can just buy single pair of shoes from the wholesaler. They need to buy this pair of shoes in bulk. Are you getting my what? You are buying them in what? In bulk. For the profit made to be what? Appreciable. That means the profit will what? Will be increased. Now, those bundles are what we call lot size. Buying them in bulk are what we call what? A lot size. Now, assuming trader A bought 100,000 pairs of shoes and trader B bought how many? 10,000 pairs of shoe, while trader C bought what? Only 1,000 pair of shoe. You will agree with me that trader A would make more money than trader B. Likewise, who will be in turn to make more money than who? Than trader C. And what determines how many pair of shoes they bought in the capital? Yeah, how many pair of shoes they bought is what? Is their capital, which they invested into what? Into the business. Someone who is investing 1 million naira into a business compared to someone using 100,000 into a business, then comparing to someone who is using 10,000 to enter a business, you can see that the differences in their profits is going to be very, very wide. Yes, it will be very, very wide because the quantity of what you'll be buying will be much compared to someone using 10,000 naira to buy. Are you getting my point? So those are simple illustration of how you can determine your what? Your lot size. Someone using 1 million to invest, you know the amount of profit you will be making than someone using 100,000 naira to invest in a business. The profit you'll be making will be far, far different. It will be times 10 different from the one using 1 million. And the person using 100,000 naira to invest will be far different from, it will even be greater than the person using 10,000 naira to invest. Their prospect will be very, very high. Let's just say that, okay, their targeted profit is 3%. Now calculate 3% of 1 million naira. How much is it going to give you? You'll be seeing nothing less than maybe 30,000 naira. Someone using 10,000, 100,000 will be seeing nothing less than 3,000. Someone using 10,000 will be seeing $30 and 30 naira profit. Are you getting my point? So they are
Yes, sir.
different. Their profit will be very, very high from each other. So now let me show you one thing. I said about lot size. So that's how a lot size. You can see where lot size is. We have what 0.01, which is a what? A micro lot size. And this micro lot size is being used on accounts less within the range of $10 to $100. That's what we use this for. So let's proceed. So that's where we insert lot size. You can see it. So the lot size there we are having there is what? 0.01. Is that not so? 0.01. 0.01 simply means what? It simply means 1 cent. One what? 1 cent. Please try to understand the meaning. Now, if you have 0.1, 0.10 simply means what? We are using what? 10 cents. Then if you should now have $1, it simply means what? We are using what? $1 as our lot size. You get it? So basically, the size of your account determines the lot size you would use and the profit you make. Someone using a standard lot size will definitely make more money than someone using a micro lot size. Do you get the point now? So in the illustration above that I just used as trader A, who bought a standard lot size, while trader B bought a mini lot size, and trader C bought a what? A micro lot size. And that's what I just break down. Now, trader C that use micro lot size is going to be using a lot size of what? 0.01. Trader B, who bought with a mini lot size, is going to be using what? 0.1. And why trader A, who bought with a standard lot size, will be using what? 1. Are you getting my point? Now, so if these 3 traders are to trade a currency pair and 3 of them made 50 pips, now how will you know who is making more profits? Now let's look at it. Let's say trader A use a standard lot size, as we know that trader A using what? Standard lot size. So the standard lot size of trader A that I use on that currency pair to make 50 pips is going to give us what? Are we all together?
Yes, sir.
Hello? So trader 1 that is using standard lot size of one lot size to enter the market. So a single move in the market, just one single move in the market is $10. Now calculate it with 50 pips. It's going to give us 500. Are we together? It's going to give us what? $500 profit. If we should move a 50 pips ahead. Are we together? Now trader B, who is using a mini lot size for that particular pair, simply means that we'll be having 50 pips times what? Times $1. That's the meaning, which is 0.1 lot size. So 50 pips of it is going to give us what? It's going to give us what? $50. You can see the far difference of the profit they will be making from each other. Now, why trader C, who makes 50 pips for what? For a micro lot size, is going to give us what? $0.1, which means that he's using 0.01. It's going to give us $5 profit at the end of the day. So even though they are still participated in the same trade and the market moves in their direction for the same amount of pips, do you get it? They enter the same trade, the same position at the same current price, but they are all targeting the same 50 pips. You can see that trader A is going to make around $500 profit for just 50 pips using what? One standard lot size. Then trader B using a mini lot size. Mini lot size simply means what? 0.1. Is going to make what? Is going to make $50 profit. Then why trader C, who is using a micro lot size, which is what? 0.01, which is 1 cent, is going to make what? $5 profit. So from those 3 traders, you see that their profits are different in terms of what? Times 10, times 10, times 10. Are we together? So even though they still participated in the same trade and the market moves in their direction for the same amount of pips, their profits were different because the amount of a particular pair they bought was different. I believe the concept is clear now. Please, do you all understand the concept now? Hello, are we all there?
Yes, yes.
Please, do you all understand the concept of this lot size related with leverage and position of trade? Very good. So setting your lot size depends on your what? On your capital. You cannot use a standard lot size for a $100 account just because you know the profit of each pips on the standard is very high. Now stick to what? Stick to the lot size matching your what? Your trading capital. As we proceed to the advanced part of it, I'll show you charts of it on how you can set your lot size with whatever money you invested. Always stick to what? Always stick to your lot size. Always stick to it. let's say, for example, now I have $100 capital. Now, with this $100 capital, don't mind me, I'm about going into trading plan, but I'm not going to talk about trading plan now. I'm going to teach you that later. So, having a $100 account, I'll advise you just use a micro lot size. Using a micro lot size doesn't mean you are not going to make something. You'll be making something, but before the month end, you know how much you've accumulated with it. You don't worry, I'll teach you about trading plan. Let's continue. Don't enter the market with greed. That is opening many position of 0.1, 0.01, 0.01, 0.01. You can now open like 10. You are not yet a pro. A pro trader knows what is risking. He knows what is RR is. When I said RR, simply means risk to reward ratio. RRR. So if you're not careful, a greedy trader will come out what? Will come out crying in the market. Hope it's clear. And I believe you're all together. So let's look at some trading orders. These are the three main trading orders. We have the instant market execution. That means you are entering the market immediately at that current price. And that's what current price. Then we also have what? Stop orders and limit orders. And the limit orders I'm talking about is buy stop. And the stop orders I'm talking about is what? Like sell stop, buy stop. I'll explain them to you. Now let's explain further. Initially, we only have three main trading orders. So when talking about instant execution, that means you are entering the market at that current price. At that current price, that's when you're entering the market. Now, I didn't explain that of buy limit and sell limit here, or buy stop and sell stop. I'll explain them to you in the chat. We all see it together. We all learn from it together. So let's say the current price we have. Should I explain it now? Okay, you know what will happen? Let's go to the main chart. I'll explain it to you there. I'll explain it to you there. We still have like more than 30 minutes. Yeah, let me just say 30 minutes now. We have more than 30 minutes to finish up the class. So let's talk about risk management and the rest. Let's talk about risk management. Now, what is risk management? It composes of all the things we've been teaching you guys, right from stage 1 to stage 2. Or let me just say, everything about this stage 2 is all about risk management. You need to understand the concept before going into risk management. Now, when talking about topic like loss size, stop loss, trading plan, grid elimination, everything all entails about risk management, including all the basic rules and plans you need to stick into in terms of your order and everything you have. Even your capital, to keep your capital safe, is all about what? Risk management. And how to grow it to become more profitable is all about what? Risk management. Now, because I told you a guy that uses what? 1.0 lot size gives $10 per pips. Now, if you're not using 0.1 lot size, it's going to give you what? $1 pip. Do you get it? $1 per what? Per pip. Now, if you're not using 0.01, it's going to give you what? $0.1 per pip. So you see that someone who is trying to go and use one lot size on a $100 account or $200 account, the person will bleed. Honestly, the person will bleed, and you think you can just get, you want to become rich overnight. Market is not like that. Market is not like that. When you do that, you stand a chance of 101 to lose all your fund, all your capital, either it's been $100 or $200. You stand a chance of losing everything or blowing the account once and for all. How? Using what? Your calculation for pips. How to calculate your pips. Now, on a $100 account, like I said earlier, that if you're using one standard lot size, it simply means what? You are using what? $10 per movement. Per single pip is $10. Are we getting it? Now calculate it out of 100. 100 divided by 10 is going to give you 10. That means you're having what? Only 10 pips. 10 pips on a $100 account. $100 is gone. Talk like I was saying 200 pips. Do you get it now? But if you are using a mini lot size or mostly a micro lot size, your account will be safe. Even though it's going to hit your stop loss, you still have enough capital to still enter another market whenever you see a confirmation in the market. Are we together? So all these things, we need to know them. We need to jot them out. Then, let's say, for example, now, if one pip is $10, then it means that one pip against you is minus $10. So just a few pips, you can say that the account is bleeding. It's back to zero. Now, note, This is what I want everybody to note. To calculate your lot size on your account, let's say, for example, oh, sorry, I made a mistake. I said, let's say, for example, don't mind me. Let's say, for example, you have $100 account and you want to know what lot size are you going to use. So this is what you do. Your $100 divided by 8933 is going to give you the lot size to lose. And the lot size to use, which is what? 0.01, which is a micro lot size. So beside it, you see where I write SSS in dollar divided by what? 8933 is equals to what? We give you the lot size to use on your account, regardless of any account you are using. Either it's been 1,000, 100, 200, it's going to tell you the exact lot size you're expected to use in the market. That's the formula I use whenever I'm trading any account, no matter how the account is, either big or small. And the maximum position I can open on it, I know my calculation, I have my trading plan. So if you don't want this man to come play, don't mind me using casket. You should come and sit down beside me. Ah, what a pity. Sorry, my brother. You understand now? So please stick to your lot size and the kind of capital you are using this formula under this my notes here. So when the market is going up, don't necessarily mean that it will be going up like that forever. There will always be some movement in terms of what? Retracement. Retracement will always occur. Same way, if the market is going down, it will surely retrace up a bit before continuing going down. Do you get it? It doesn't just move in one direction. No, there's always a change in character. The market do tend to change. So don't let us to be greedy while being in the market, please. It's very, very important. Please, are you all following up with me? Hello, are we all there?
Yes, 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 yes.
Yeah, thank you very much. So let's continue because I don't want a situation where my mic will have disconnected again. That's what I'm trying to. And can you all see my screen as well?
Yes.
Thank God for today. Thank God, Mama God. Thank you, sir. So let's continue. So there's what we call pullback and retracement. I've explained that in our previous class. So I'll show you sample of everything. I'll show you everything. So don't let us be greedy. If you are not greedy in the market, you make money. You make money. That one is for sure. So don't let greed lead you to a bad way. Learn to use your proper risk management. So there's money in the FS for you every blessed day. There's money in the market every day. Just take the one you can take and walk away. Don't let greed come into your mind, or you want to think of getting rich overnight. Don't have that kind of mindset. Don't have that kind of mindset. Grab the small you can every blessed day. And not every day you trade, only when you have confirmation of your setup as well. So come back tomorrow, you grab some. The market is there every day for you to trade. So do not what? Do not over trade. So don't open like 5 to 10 trades a day. Are you getting? Don't open what? 5 to 10 trades in a day. If you can just see maybe 2 or 3 setup just for a day, it's good. 2 to 3 is okay. And if it's only one that you know that is going to go for long, you want to swing the market, you can. Than opening one, you close, you look for another one. Okay, let me enter again, close. Enter. Before you know, if you should calculate the profit you've made nothing compared to applying proper risk management. So let's apply simple things. And so please, also, the journey of Forex is not a day journey. It's a journey of 1,000 miles. Please, don't let this mindset of I want to get rich quick in the Forex market. Don't let it come into your mind. Once it attracts your mind together, you'll be losing thousands of money to it. So once you apply proper risk management, you'll be able to understand what and where to enter, what and where to leave. So there are times that you may need to open multiple positions and increase your lot size. That means you are making more profits, then you can increase your lot size as time goes on. So on few occasions, we will get there. But these are the general rule. Stick to your suitable lot size. Don't overtrade. Never get greedy. The market will always be there. Once you have these like a chorus in your room, just write it out. Looking at it every day will be giving you that mindset that I must not be greedy to this market. Let me take the profit I can. That's why I keep on saying it. Every day we are having our classes, I always tell you one thing. I said, be selfish to the market, but don't be greedy to the market. It has a meaning. I'll show you an example of what I mean. Let's continue. So let's say, for example, now, even if it's 0.1 lot size you are using with a starting capital of $1,000, you can start with any amount you feel like. Do you get it? Making 50 pips every day, making $50 every day. And sometimes you may not even reach $50, but just after I say that, okay, I have a trading plan. I'm making $50 every day. Still, my brother, is very fair. Making $50, you are making someone else salary in a month, in a day. Bro, in a week, you are making 250. And you know what 250 simply means now in our new currency, almost close to 280,000 or close to 300,000. You are making like that in a week. You get it? And in less than a month, you've made times two of your money. Please, let's apply proper risk management to whatever we are doing. Then the following months, you can just increase it a bit by targeting 70 to 80 or gradually. Before you know, you're progressing and you're also what? Making money from the market. Remember, losses are inevitable in the market. You will surely make some losses. Some days, it can be a week like that on a go, and sometimes maybe 2 or 3 days on a go, or 2 days on a go, or one day. Then you recover it back. Just believe in yourself and believe in the strategy you are using. So let's continue. Let's continue. I'm going to skip all this place. So let's go to what? Trading plan. So here we are, trading plan. In everything we do, we need to plan. So as we are as in trading as well. This could be your full-time job. Never take Forex as a quick to risk scheme. Take it as a business. So better start treating it like one of your onset business that you're planning for before you start trading. You need to draw your trading plan. You need to write trading. You need a written trading plan before you can kick off your Forex journey. You have to plan yourself before doing anything. You can't just say, okay, I want to do something like that. You have to have the plan before doing it. So take note of the word written. You must be smart in this market. Like, you need to write everything down. Also, while forming your plan, you need it to be what? You need your plan to be smart, specific, measurable, achievable, realistic, and time-bound. The time-bound aspect is in terms of maybe you are a scalper, you are a day trader, you are intraday trader, swing trader, or a position trader. So all these things also applies in the market. So whatever trading plan you're planning, have all these at the back of your mind. Your trading plan must be smart, specific, measurable, achievable, realistic, and time-bound. So you need factors like this to be considered when doing your trading plan. So let me show you a sample of my ball. Before showing you, I want you guys to have your own journal. There's what we call trading journal. Trading journal can be in terms of a book whereby you jot down every activities you are doing in the market. Whatever you are looking at. Okay, I'm looking at GPUSD. The current price is this. I'm speculating at this also point. This is when the market is supposed to retrace, or this is where I'm going to enter the market. This is where my stop loss is going to be. This is where my take profit is going to be. And once you place it out using also loss size, you write everything. You jot down every single thing. Whatever happens in the market, if the market hits your stop loss, you look at it. Okay, what's the reason why this market hits my stop loss? Is it because of high momentum in the market, or because of news, or because you have to jot every single thing? I have mine as well. I'm done with one of my books, one of my diary. I just opened another one for 2024 now. So all these things, you need to jot them out, because part of it can be a reference to what's happened or what's current situation you're facing in the market. Whatever you've jotted down in the past can be something that is going to reoccur in the market. There's nothing new happening in the market. It's what has happened in the market before. But if you're having a trading journal or a trading plan, it's going to give you a reference to what you're going to do. Please, are we all together? So please ensure that these are the things you need to put in consideration. And I want everyone to get a paper and write it down. I said, please write it down, because you tend to understand each concept as you inscribe it down. So I'm going to share with you all my own personal trading plan, which I have intimated, like I'm working on it. Here's my trading plan. I would earn 100% of my trading capital or equity in a month. Like I said earlier, using a $100 account, I'm targeting for $5 every blessed day. In the next 20 days, I've seen what? My $100 capital. And there will be some days where I'm going to make more than my $5 every blessed day. That means I'm only targeting what? 5% of my capital, which is what? 50 pips. And instead of me targeting 50 pips, I can trade only 3 trades in a day. 3 trades simply means that maybe I'm targeting 25 pips, 25 pips, or 20 pips, 20 pips, then 10 pips. But most especially when you have high probability setup, you can target your 50 pips once and for all. But if you're not having high probability setup, you can target 30 pips. You relax. After trading the London session, then during the Union section, you can target your remaining 25 pips. Then you are done for the day. Markets will always tend to deliver 30 to 50 pips every section. Let's say for London session, and there will be some silent time whereby there's no news, no volatility in the market. The market will just be creating within 10 to 15 pips. Do you get it? So all these things, you need to understand the concept of what the market is doing at that particular time. Your consolidation zone, that means your ranging position, your accumulation, your distribution. Don't worry, I'll explain everything as time goes on. So this is my own trading plan. I would earn 100% of my trading equity in a month. One, I will set a near-term goal and make at least 25% of my trading capital in a week. And I will plot these targets daily. You have different kind of trading plan. You get it? If I'm behind my trading plan for the quarter, I will take a brief break to reevaluate my trading system. That is, if I'm trading, let's say for example now, today's trade, I took the trade, I hit stop loss, tomorrow I hit stop loss. You know that I'm not going to meet up with my 100%. Is that also? But there will be some days whereby instead of you making that $5, the market can deliver maybe $7 for you, depending on the kind of strategy you are using. Do you get? Depending on what you are doing in the market. So some little profit on top of that $5 or $2 on top of it, we add up to fix that 2 or 3 days you've missed. So if I have more than 4 good, you can see if I have more than 4 losing trade in a row, I will take a break of 2 days to reassess myself in the market. That okay, what is happening? Why am I having these losses consistently? What am I doing wrong? So anytime I take a break, I will.
Mr. Moshud, we can't hear you again. No.
Set put.
Mr. Moshud, we can't hear you.
Thing is on call, a call came through. A call came to the one.
Hello, Mr. Moshud. I guess his network is. Mr. Moshud, if you can hear us, we can hear you. So probably you need to check your connection. Hello, Mr. Moshud. Can you hear us?
He said he has to start his phone. I think a call came through.
Okay. Okay, I think while he's doing that, so we can just engage ourselves with what we have learned so far. So sorry, I don't know if there's anyone who is not clear enough with his explanation, or if there's anything you want to add to what he had said, please. You can just signify. Do you have anyone with any question? Probably there's anyone who is not clear with what I said. Or let me just come in now. Based on
There's a question in the chat room.
okay, in the chat room. Okay, let me check. Sorry, what is the question? Do you have
No
access to
question.
the question?
No
I
question.
was sent personally.
There's no send.
Okay, let me read the question. Let me read the question.
Right,
In the
sir.
meeting chat, this was a question that the person's name is Ola Dokun. This was the question I asked. He said, please, I have a layman question. The money lost, where does it go? And vice versa. That was his question.
Mr. Ladaduku, are you still there, sir? Hello?
Yes, it's still here. Probably is maybe his network is not connected.
Okay. Hello, are you there?
We can
You
hear
know,
you, sir.
one thing about forex is this. As one part is gaining, another part is losing. As one part is gaining, another part is losing. So any money you lose, you are losing to the market. So we have people, like we have traders in the market, we have banks in the market that are actually going to take up the profits. Like they will take up the money as profit to themselves. So as money, like it's just like, let's say Nigeria and US now they are trading. Any money Nigeria lose, we are losing it to US. Any money US is losing, they are losing to Nigeria. So that's where it is. So the profit you are making, we have, as you are making profit, people are also losing as well. So money is being exchanged from one person to another person on the market. So is there any other question you'd like to ask, sir? Or did I explain this in a layman's language, sir?
Yeah, I get it. Thanks.
Okay, sir. Okay, sir. Thank you, sir. Do you have any other questions? Any other person? Mr. Subu, do you have any question? Mr. Sonia, Sonny side, do you have any question? Sir, you can continue.
Okay, thank you, sir. Okay, I think that's a question. Also, I would like us to have this at the back of our mind whenever we are trading. I think we've had that encounter with some of our traders, with, let me say, few, those who are new in the system. We should not raise our expectations so high when we're trading forex. Don't give yourself a fixed ROI. Forex doesn't work like that. Nobody is a forex is controlling the market. You trade based on, even if it is a bot, you trade based on analysis. So we need to limit our expectations. We shouldn't raise our expectations so high. Also, we should have it at the back of our mind that no matter how perfect a setup is, there will always be drawdown, no matter how perfect it is. So we shouldn't be expecting our trade. If you are trading manually, you shouldn't be expecting that each time you trade, you must make profit out of the market. No, there are bad days, there are days you make loss. So if you make the loss, it's part of it. What really matters is you preserving your capital and ensuring that you still have something to trade with. I think Mr. Mashud is back. Mr. Mashud, welcome. Can you hear me?
Yeah, thank you very much, ma. I'm with you, ma.
Okay, you're welcome. So you can just continue from there, from where you
All
stop.
right, ma. All right, ma. Thank you, ma. Let me share my screen back so you can all see everything and we can proceed. Hope you can all see my screen now.
Yes.
Yes, sir.
All right. All right, sir. Oh. So we stop around this zone here. Okay. Yeah, here we are. So I was talking about my trading plan. So please ensure that anytime I take a break, I will close all my losing trade and protect what? And protect my winning trade with stop loss. There are sometimes whenever you'll be trading, you'll be in profits. You can set break even. There's what we call break even. Break even simply means adjusting your stop loss into your profit zone or above your entry zone. So that means you are breaking even. So doing that, you can just do that. Take partial profits you can take. Like if you are using a loss service of 0.1, I can close like 0.8 away from it, then leave 0.02. So I can close like 0.08 away from it, then leave 0.02 to be running down to my TP. That means I've taken partial. So out of that profit I've made from that, my partial profit can be my stop loss. So there are so many ways to make profits in the market. So let's proceed. Then I always record my daily trade. Whatever I do in the market, every blessed day, I'll record it. Then I'll be able to calculate what total pips I've made at the end of the week and total loss of pips I've made at the end of the week. And the numbers of trades I'm taking every blessed day. How many positions of trade have I opened in a week? I take record of everything. It's just like you having a spread book, whereby you take record of every activities done day to day into your spreadsheet. So I have my own my trading journal like that, and also my trading plan is well specific and well detailed. So I would invest only 4 hours a week to update my knowledge on forex. So just have your own plan. All these things are very necessary. You need it for yourself. Just stick to your risk to reward ratio. Stick to it. Learn the art of making something from the market and don't be greedy. If you can do all these things, you will learn a lot. So there are some common mistakes made by traders, which is another principle of life, is to learn from other people's mistake. When you learn from other people's mistake, you'll be able to understand that, oh, this person, I'll see someone doing this kind of mistake. I don't want to repeat that kind of mistake, because they always say once beaten, twice shy. Is that not so? So I'm going to show you a sample of your account that is bleeding. Please don't shout. Oh, it's just a sample, a bleeding account. So you can see this guy here now. Don't mind me. This is a synthetic account. Do you see? This person had to close all this trade. He loses $1,000 accounts. He loses $1,000 accounts, even more than 1,000, because I know he has made profits, so almost like he has even doubled the account to 2,000. Then in the gleam of a day, he lost everything. In less than 3 or 4 days, he lost everything. So this example of a bleeding account, you can all see. So this example of bleeding accounts is trying to tell you that this person doesn't apply proper risk management. No risk management in that account. And also, when practicing, you use a demo account to practice. When you understand your edge, like growing an account of, let's say, for example, a $50 account, you can grow it to $200 account. That means your strategy is working for you. Don't waste too much of your time on a paper trading. That means trading on demo. Don't waste too much of your time trading on demo. What's the essence of you learning forex market and you just focus on trading demo only? No. You can trade your demo for like 3 to 6 months, perfect yourself on your strategy, then go on live. Then you prepare your mindset, have your trading journal, have your trading plan, stick to it. No matter any side talk or anything, don't listen to it, just stick to your plan and work to it. So please, I won't say much. That's the end of our trading class. So please, I will beg everyone, because of the time frame is very short now, I'll go into the chat. We'll look at 1 or 2 things before the time session end. Now, please, I want you guys to know something. On Friday, all this theory that we are having here, we'll practicalize everything into the market, like in our MC4 or MC5. So let's go into MC5, for example. I'm going to use MC5 for example. So at this point here now, we have quotes. This is where we talk about quotes. So under this quote, you can see different kind of currency pair. These are the ones I focus on mostly. The first 2 and the last one, that's what I focus on. These other ones, I hardly trade them. So now let's take it one after the other. Euro USD, for example, now you can see when I click on it, it brings us new order, charts, properties, depth of market, market statistics, simple view. But we are going towards new order. So under this new order now, the first thing you see there is what? Market execution. Is that not so? So under this market execution, once I click on market execution, I'm clicking on it, it brings out other things under it. Now, the first 5 that we have are the most important things in the market, which is what? Market execution. Now, what does market execution mean? Market execution means taking the trade immediately at that current price. Entering the market at what? At that current price. Then buy limits. I'll particularize what is buy limits for everyone to see. Then we have what we call sell limits. I'll also particularize it. You all see it. Are we together? Then we have what we call buy stop. and there's what we call sell stop. I'll explain everything together. But that of buy stop and sell stop, that will be on Friday. I'll explain that on Friday. Then once I do that, then we'll look at one or two other things. Then we'll call it a day. That's the end of the first phase of the trading section. Now let's look at the buy limits, for example. Now I've explained that of market decision. That means you're entering the market immediately. But before I enter the market, the next thing is about this lot size. Let me click on it. Can you see my cursor clicking on that 0.05? Now the reason I'm using 0.05 is because of my equity. The equity I have here is what? I'm having $5,000 accounts here. Now on this my $5,000 account, then you go to your calculator and punch your calculator. 5,000 divided by 8933. What is it going to give you? It's going to give you what? 0.559. Do you get it? That means I can use 0.55 or 993, 8993. This is it. So I'll be having 0.559. That means I can use 0.55 or 0.56 to enter accounts of $5,000. It's only one position. Are you getting it? Only one position for it. Because some other brokers, normally this is not a broker, this is a pro firm account. Some pro firm will tell you that the highest limit position you can use is this. The lowest you can use is this. Do you get it? For me, using proper risk management on good, the position I opened there, if you notice one thing on my account here, you see that the good I used was what? 0.02. Initially, it was 0.05 I wanted to use. But applying proper risk management, you can see it hasn't even triggered, but I'm waiting for it. Look at where my TP is and where my stop loss is. You see that I'm using proper risk management. This is what we call buy limit. Buy limit means that you are waiting for the market to sell down to you where you are at that current position. The market is doing what? It's selling towards you. Let me use my cursor. The market is selling towards my direction. Once it tap at this zone here, this is my buy limit zone. If the market goes in my favor, this is my TP here. Now, what am I doing here? This is it. Once I click on it, you see that using 0.0 also, I'm only risking 31. Let me just say I'm risking 32 to make what? 138. And if you should go to your calculator, you punch it there. 138 divided by 32. What is it going to give you? That means I'm risking 1:4.3. That means I'm risking what? 1:4.3. I'm only risking $32 of the capital to make what? $138 profits. Are we together? You can see that I'm not using big lot size, but I know what I'm doing in the market. Proper risk management. And what did I do again? I'm also giving the market enough space for retracement or anything to happen at that zone. Hope you are all getting my point. I'm giving it what? Enough breathing space. That's why I'm using what? A very small lot size to make what? $138 profit against what? This my SL here. That was one of it. Also, when it's about sell limits, let me explain sell limits. Let's go to GBP USD. There's a zone I wanted to enter, which I'm expecting the market to trigger. God, why did I close this market today? Why did I close? Well, never regret closing any market. Initially, it's almost at my TP. This is where I set my TP before. This zone, this is where my TP is. And the market is close to it. But let's assume that I'm opening another market from that zone now. I'm opening a sell market. You can see that for sell market, the market must buy down to that level. Then if it's tap that zone, it's sell downward. Then from there, I can put my stop loss, calculate your stop loss. I like using 15. 15. Then my take profits. Then I calculate 15 times 3, that's 45. So I always target 50, 45 to 50. Let me use 50 or 60. 60 is okay. That's 1:4. Yeah, very good. So I'm using 1:4. Then I proceed. Now, at this point here, what does it show? It shows what? Sell limits, the lot size I'm using, the current price of the market, both for the ask price and bid price. Then the price I intend entering the sale, which is this price here. Here you see price. That's where I intend entering the market. Once the market reaches that zone, you can see that I'm setting it automatically. Once the market reaches that zone, it tap it. No matter how it tap, sometimes it can give you sniper entry, and sometimes it's going to give you a small pullback before going into your direction. Then the red box, where you're seeing that red box, where we have the red box, is telling us that that's where my stop loss is. And the green box indicates that that's where my take profit is. Then I can now proceed by clicking what? Place order, because I'm using what 0.05. Then I click on place. Now let's look at it in our trade. You can see that it has been placed under GPP USD. That's where I want to enter the sell market. Are we getting it? You can see what? The limit order of what? Buy limit and sell limit. Now let me explain about sell stop. Now, still staying under this thing. What's the name called? GPP USD. But let's go to Euro USD. I don't want to go and violate the rules. Let me use this one here, Euro USD. Now, I'm going to do a simple particularization about it. When we say something to be what? Buy stop, for example, now, let's click on this limit here. At this point here now, I want to do sell stop. For example, now, at this limit here now, let me put it around this zone. Then I can click on this zone. That means now, when you want to do a sell limit, a sell stop simply means that the market is buying already. So if the market is selling down, it's going to reach a zone where you want the market to reach. Once the market reaches that zone, if we tap into that your zone of sell stop, that means you are expecting the market to tap your sell, then continue selling as well. Do you get that simple illustration? You can see that the market is buying right now. And at this point here, I've set a sell stop already. Sell stop simply means that the market is going to tap in your zone. Once the market starts selling, it's going to tap in your zone and continue the direction. Or there will be a little pullback, then continue your direction to hit your what? Your take profit. My take profit can be in this zone here. Let me put my sell stop around this level here. Can you see it? So at this point here, now I'm setting a sell stop. Then you proceed. You can see now, what does it write? Sell stop. But if it's for buy stop, that means you put it above your buy, where the direction is facing as it's buying. You just put it above it. It won't be like buy limit. It's going to be what? Buy stop. Now, let me show you an example of buy stop. Now, let me take it back. At this point here now, the market is buying. Is that also? Then I can change it to buy stop. You can see that the market has not reached that zone, but I'm placing it down that once it reaches this zone, you should tap in and continue buying. That is buy stop. Please, hope I'm clear. Can you all hear me?
Yes.
Very well. So this buy stop. Do we get it? This is buy stop. I've explained about so I can just click on continue. You can see now, this is your channel where you are going to place order. Then the price is there already. Where you see price, that means that's where I want to enter the market from. The market should continue from that point. And if you're going against me, you've calculated your stop loss and your take profit. Always ensure to use minimum of 1:2.5 to whatever risk to reward ratio you are using. Please, if you understand all these concepts, let's call it a day for tonight. Then we'll continue the rest. Even the buy stop and sell stop, I've even explained it now. And I said we'll talk about it later. So you can see it now. We've talked about buy limits, sell limits, buy stop, and what? Sell stop. So once I even place it now, you can see it has placed. Once the market tap in that zone, if the market continue buying, it's in my own favor. Are you getting it? And if the market hits my stop loss, I'm applying proper risk management. That means I'm only risking what? $5 of my account for what? $11. That's 1:2. So all these things you need to understand. You need to understand your risk to reward. It's not about making the money once and for all, but about making it small. By the time you now look back, how many profit have I made? You see that you've built your account with something massive. It's not a day work. It's something you have to keep on doing consistently. Thank you very much for everything, and thanks for coming up tonight, listening to today's class. Let me delete this one. Let me leave that one.
Question. I have a question. Good evening, Mr. Moshood. I have a question.
Yeah, good evening, sir. Proceed, sir.
All right. Okay. About that stop loss stuff. Is it better to put your stop loss at the support zone, or is it better to put it at where your risk, your loss will be minimal?
It's based on what your setup is telling you. Based on what your setup is telling you. But I do advise that ensure that your stop loss should be within the range of 10 to 20 pips. That's the best, 10 to 20 pips. But don't use 10 pips all the time, because market should always trap it. market will trap it and then start moving in your direction. So to me, as my own strategy, I always ensure using within 15 pips to 25 pips. The reason I'm using 25 pips, I'm going to use a very minimum lot size to make something big because I'm giving it a wide spread. You can see that of gold, for example, now. That's what I do for gold mostly. Gold like trapping. It like taking people out before moving in your direction. I've understand that aspect very well for long. So I always give gold enough breathing space, then use minimum lot size to catch it.
All
Hope
right,
I'm
thank
clear.
you very much. Yes.
Yeah, you're welcome, sir. Any other question, please? Please, if you have any question, you can ask. And the absence of no question, I will hand over the mic to our COO.
Okay, thank you so much, Mr. Mashud. Thank you so much for the nice class. Really appreciate. Thank you for that
Oh, you're welcome,
educative moment. We really appreciate. And please, if you have any question, please we can do by asking Mr. Mashud. And if we don't remember, if we don't have the question, and probably the question popping later, we can always drop the message on the group on our platform. We'll always attend to it. And please, Mr. Mashud, for the last assignment, it has not been reviewed. The task given, people have turned up on the group.
Yes, I'm going to review everything. I'm going to review everything. What happened is that for like 2 days now, we don't have power supply here. So I have to go and charge my phone down.